All right, let's go. Have a quick brief here on the playbook. This video is not gonna be long. It's gonna be a short video. I will have a longer video for this one. This is only like the idea. You understand what's a daily playbook and why it's so important for you to have it, and why it's one of the most important things in trading. And let's go to this PDF that I built here, where we have a template. You guys can see here. There's a template for your daily playbook. And pretty much what's in the template, it's before you start trading that day. Some people do it, they say do it 15 minutes before. I don't suggest you to do it 15 minutes before you start trading. You should do it, if you're gonna start trading at 8 a.m., you should do it around like 7:15. So your brain understand what's happening with the market and you have a couple more candles to see what's going on and to your brain to process, you're up, you're in the market, and I think that's a little better. Some people do it 10 or 15 minutes. Now I do it 10, 15 minutes. It's be working good for me. But before it was not, to be honest with you guys. It's doing it an hour before it's kind of better. Stepping out of the chart, doing all the thing and going back to it, it's a good thing. Um So pretty much you start like reviewing your journal, reviewing what happened in the day before and reviewing what you did wrong. If you got, time or you're not supposed to get in. Uh, if you put the stop loss in the wrong size, if you got in too early in the trade, you know. So you review what you did the day before or the week before, if the market is in the same levels, the same historical levels. You define your buys. You gotta understand if you went for a buy, you went for a sell that night or that trading session, and you gotta see if the market is going bullish, if it's going bearish, if it's in a consolidation that night that you're not gonna choose to trade. You gotta define your buys, and then you start gotta mark in your key levels. You gotta start placing Fibonacci. If you gotta place a Fibonacci, you gotta start looking for where your imbalance levels at. Sorry for that. You gotta start marking where the discount levels at. You gotta start marking the liquidity points and all these micro levels, smart money that happened the trading session before, or the day before if you haven't traded like a day before, or wherever your scenario is at. So make sure you plan your setups. Make sure you plan some 1, 2, 2 setups. Before you start trying to trade on your phone. Before you start opening your phone trying to trade. You got to see if you're gonna place the signal that we send on the community, or you're gonna place any signal that you're buying for anybody else, or you're gonna place your own signals. And you gotta create set your mindset, you know. Uh, you gotta understand if you told yourself that you was gonna get only $500, and I don't know where you place the trade and the market shoot up and you're positive $800. Some people don't close the trade. Some people want to let the trade run, thinking they're gonna go to 2000, and I don't know where the market goes down and hit stop loss. So make sure you put your stop loss. Make sure you put your take profit all the time. Make sure you set the mindset. Make sure if you're gonna go to work in 2 hours and you start trading at 8, you start trading at 6 a.m. and you gotta go be at work at 8, and you place a trade at 6:15 a.m. and the trade be run for an hour and 30 minutes, and you're about to get in the car to go to work and you have positive $200. Make sure you close the trade, because you're gonna be driving, you're gonna be at work, and the mindset was for you to trade only for 2 hours, correct? It's not used to supposed to be the phone while you're at work. So create the mindset, and just an example how I kind of write this thing out, the pre-market routine. There, I'll review my journal, what I say, what I did wrong the day before, the week before. What I think the market is gonna do is you're gonna go bearish buyers already to start thinking if I'm only gonna be selling or buying that night or that morning. I already marked my key levels, if the market start shooting up, I already kind of will have idea onto when the market is gonna stop. Um, like I say, key levels can be Fibonacci key levels, can be historical key levels going back to like when the market was historical at that level. So, you mark those levels, you can place a line from all the way from that day that come across all the way to today. And you mark all these levels so the market doesn't give you too many emotions. You don't be like, oh, what's happening here? Look at this, and you be going through emotions while you're on a trade. So um so it's an example here as a key resistance. So I was thinking the market is gonna come to this level, it was gonna stop, and if I see the market stop and start shooting strong really down, so it's kind of like confirming to me that that was a level where like I should be placing my trade, etc. So you see the entry zone is in here, but my stop loss is gonna be around 85, and for taking profit around this level, which is discount levels for me at this point, because of Fibonacci levels. So, you know, and I plan myself. I think in the Tokyo session, it's gonna it's gonna have rejection, which it could be a rejection, can be a swap liquidity, can be plenty of the things. Just the rejection in this case means that the market is gonna stop at this level to start going down. If I see this stop and the market start going down, so that's one of my confirmations. The first one for the big engine to come on London. So for the past couple weeks, London has been shooting in only one direction around like pre-London, late Tokyo, around 12, 1, couple hours, 2 hours before London hits. So it's gonna be predictable around that. So I kind of like write these things down. I'm risking 1% around Tokyo and probably like 2% around London because London has been more predictable than Tokyo. And maximum trades that I placed was 3, and that I placed Vium signal, which is the signal that we sent in the community. Yes, what it was one of the focus that I must did was staying calm during gold fast move. If I'm willing to let my trade run. So what I do is I let it run to that level that I'm expecting the market to go. I don't try to get too emotional. If I don't know where the market for 300 shoot to like 1400. I stay calm because the level where I want it to go, it's probably like $12,000 more, which is gonna be like $2,400, right? So I stay calm. This is one one of the part of the mindset that I explain to you guys. That I train my plan, not emotion. Passion is it's my edge. I'm trying to tell myself a good affirmation. What I do good. It's not all the time. It's bad. All the time you gotta hit your head like I'm a bad trader. Now you also have to tell yourself when you do good. You gotta tell your brain, hey, you did good. You did good this time. So your brain understand when he does good and can repeat that in the future. You know. Um, End of the day notes. I put two shorts. I got two. In this case, this is TP1. And in my third trade, let's see, this was a trade around 3 a.m. I hesitate and because I enter too fast, for example, I hesitate to close it too early, and over performers, I give myself a 9 out of 10. This day probably, I made like almost like 3 TPs. So, it's an amazing days in here and improvement, practice, and people like to perish. Exactly. So this is pretty much the template that you guys gonna have here. You guys gonna just click this link and be able to access to it. So this is gonna be a template here that you guys just mark if you guys review the analysis. That I already explained all these. But this is pretty much what I mean when I say you need to have a playbook template with you all the time. You guys can print this out, print at least like 7 to 10 per week. Have it on the desk with you. Have a market with you all the time. I have a little tool where you can make the holes on the paper, and buy one of those portfolio things and have it with you all the time where you can go back after the week's over and you can find your errors, you can find when you do wrong, and you can back test that. And these come together with your journal, This is something you do pre-market, this is something you do before the market hits. So when your trades start running, you have these things in front of you, in front of your desk, and you already tell yourself where are the key levels, or pretty much half of the information that you should know when the trade's running. So when the trade's running, if you go over $300 and it shoot to $1,000, some people get desperate. Should I close? Why should I close? And you should get calm because you already kind of know what's about to happen, and have an idea. So, yes, guys, this is the video about the playbook, and like I said, I'll have this template put down here in the video for you guys to click it and start working with this.